I'm a student of history. I've read a lot of it. And one of the things you learn when you read history is that the world is very good at creating periods of calm that feel like they will last forever. People forget that the sea has a tide. They forget that storms are not an anomaly. They are an inevitability. For the better part of a generation, we've been sailing on a very calm, very predictable sea, and it has made us comfortable. It has made us complacent. We've started to believe that this is the new nature of things. I'm here to tell you today that the barometer is dropping, the sky is changing color, and there is a seriousness in the air that I have not felt in a very long time. Something is about to happen in America. This is not a forecast. I don't have a crystal ball, but I have been in this business for over 80 years. I've seen a thing or two. I saw the speculative manias of the 60s. I saw the crushing inflation of the 70s. I saw the crash of 1987, the dot-com bust, the financial crisis of 2008. They all had different names, different triggers, but they all had one thing in common. They were preceded by a period where people collectively started to believe that the fundamental rules no longer applied. We are in such a period now, and it is my duty as your partner to talk about it plainly. Before I lay out what I'm seeing, I'd like you to do me a favor. In the comments, just write down one word that describes how you feel about your financial future right now. Are you confident, anxious, confused, excited? I want to get a sense of the room because the feelings you have are part of the story. What is happening is not a single event. It's a convergence of four powerful currents that are pushing us toward a very dangerous set of rapids, and many people are rowing as fast as they can directly into them without even looking up. 1. The great disconnect. The casino has swallowed the factory. For most of my life, the stock market, for all its daily gyrations, had a tether to reality. It was connected, however loosely, to the real economy, to the factories making things, to the railroads moving goods, to the businesses selling products to people. The price of a stock was supposed to be a reflection of the value of the underlying business. That tether has been frayed to a thread. We have created and now celebrate a system where the financial economy has become almost completely detached from the productive economy. The stock market has transformed from a place where you allocate capital to productive enterprises into a giant global casino, and the chips are moving faster than ever. I look at what goes on, and it's astounding. You have people trading options that expire in a few hours. You have them buying digital tokens that represent nothing, produce nothing, and have no intrinsic value, all based on the hope that someone else will come along and pay more for it tomorrow. You have companies with no earnings and no plausible path to ever having earnings being valued at billions of dollars. This is not investing, it is gambling, pure and simple. The serious thing that is happening is that this casino mentality has moved from the fringes to the very center of our financial life. An entire generation is being taught that the way to get rich is not by building a business or saving your money in productive assets, but by guessing which lottery ticket is going to get hot next week. Now, why is this so dangerous? Because a system built on speculation is a system built on sand. It creates the illusion of wealth without creating any actual value. When you buy a share of a cryptocurrency, the economy is not one bit more productive. No new product has been invented. No new service has been delivered. Money has simply moved from one pocket to another, with a good chunk of it being scraped off by the house. When I buy a piece of the BNSF railroad, that capital is used to lay new track, to buy more efficient locomotives, to move more of America's goods from where they're made to where they're needed. That is value creation. It makes the whole pie bigger. The casino does not make the pie bigger. It just reslices it, and in the process, it creates enormous instability. When the majority of market participants are no longer focused on the long-term value of a business, but on the short-term direction of its stock price, the market loses its function as a rational allocator of capital. It becomes a mood ring for the collective psychology of the crowd, and crowds, as history has shown us time and again, are prone to fits of mania and panic. The serious part is that the scale of this casino is now so vast that its convulsions threaten the real economy when this speculative bubble bursts, and it will, because they always do. It will not be a contained event. It will wipe out the savings of millions of people who mistook gambling for investing. It will cause a sudden, sharp contraction in spending. It will force companies to lay off real workers who were employed in real, productive jobs. The casino, which produced nothing of value, will end up destroying immense value in the real world. That is the great disconnect, and it is the first sign of the approaching storm. 2, the broken compass. We have lost our fear of debt. I want you to think about a simple business, a corner grocery store. The owner works hard, serves his customers well, and at the end of the year, he's made a small profit. He has a choice. He can take that profit and use it to pay down the loan on his building, strengthening his balance sheet. Or he can borrow even more money to put a fancy new sign out front, hoping it will attract more customers. For a prudent business owner, that decision is a balancing act. Debt can be a tool, but it is also a risk. It puts a claim on your future earnings. It reduces your flexibility. It makes you vulnerable to a bad month or a bad year. A wise owner has a healthy fear of taking on too much of it. As a country, we have lost that fear. We have lost our compass when it comes to debt. And I'm not just talking about the government, though that's the most glaring example. The national debt is a number that is so large it numbs the mind. But think of it this way. Every single year, our government spends well over $1 trillion more than it takes in. $1 trillion. That's $1,000 billion. We are financing our present by mortgaging our future at a rate that has no precedent in peacetime. The politicians will tell you it doesn't matter. They'll tell you we can grow our way out of it. But for a business to be healthy, its earnings must grow faster than its debt. Our debt is now growing significantly faster than our economy. This is the definition of an unsustainable path. At some point, the world, which has been very happy to lend us money for a very long time, will start to question our ability or our willingness to pay it back in dollars that have the same purchasing power. At that point, interest rates will have to rise dramatically, not because the Federal Reserve wants them to, but because our lenders will demand it. And that will act like a tape break on the entire economy. But this isn't just a Washington problem. The same addiction to debt has filtered down into the corporate world and into our homes. Companies have borrowed trillions of dollars, not necessarily to invest in new plants and equipment, but to buy back their own stock, often at high prices to goose their earnings per share. Their balance sheets are far more leveraged and far more fragile than they appear. And individuals have followed suit. We have normalized the idea of living on borrowed money, car loans that last 7 years for a depreciating asset, credit card balances that are never paid off. The margin of safety, the simple idea of spending less than you earn, has been replaced by a culture of instant gratification financed by debt. The serious thing that is about to happen is the end of the era of easy money. For 40 years, we have been in a broad trend of falling interest rates. That trend has ended. We are now in a new world, a world where debt has a real cost, and that cost is rising. This will be a profound shock to a system that has been built entirely on the assumption of cheap and abundant credit. Businesses that were profitable only because their borrowing costs were near zero will go bankrupt. Homeowners who stretch to buy a house with an adjustable rate mortgage will face foreclosure, and the government itself will find that an ever larger portion of its budget is consumed not by providing services, but simply by paying interest to its creditors. The crisis will be a crisis of deleveraging. It is the painful, unavoidable process of unwinding decades of imprudent borrowing, and it will feel for many like the world is going in reverse. The broken compass has led us to this point, and the journey back to solid ground will be a long and difficult one. 3. The illusion of control. The Fed's magic wand is losing its power. During the financial crisis of 2008, I said that our economy was like a great athlete who had suffered a cardiac arrest. It was flat on the floor. The paramedics arrived, that was the Federal Reserve and the Treasury, and they used extraordinary measures. They pumped trillions of dollars into the system. They brought the patient back to life. It was a necessary and, in my view, a courageous intervention. But it came with a long-term side effect. It created a powerful illusion, the illusion that our economic managers have a magic wand. It fostered the belief that no matter how reckless the behavior, no matter how great the crisis, the Fed can always step in, print money, and make everything okay. This belief, often called the Fed put, has been the dominant psychological force in the markets for over a decade. It has encouraged risk-taking. It has inflated asset bubbles. It has severed the link between risk and consequence. The serious problem we now face is that the magic wand is losing its power. Why? Because the one thing that ties the Fed's hands is inflation. When inflation is low, they can print money with relative impunity. But when inflation is high and persistent, as it has been, printing more money is like trying to put out a fire with gasoline. It only makes the problem worse. This is the trap we are now in. The next time we have a serious economic or financial shock, and we will, because that is the nature of a market economy, the Fed will face an impossible choice. If they respond as they did in 2008, with massive monetary stimulus to prop up asset prices and bail out failing institutions, they risk igniting an inflationary fire that could destroy the currency. If, on the other hand, they prioritize fighting inflation by keeping interest rates high and credit tight, they risk allowing the financial shock to cascade through the system, leading to a deep and painful recession. They have run out of easy answers. The toolkit that seemed so powerful in the last crisis is now filled with tools that are either ineffective or have calamitous side effects. The crisis that is coming is not just an economic one. It will be a crisis of faith. It will be the moment when the public and the markets realize that the wizards in Washington are not in fact all-powerful, that there are some problems they cannot solve, that there are some consequences that cannot be bailed away. When that realization dawns, the reaction will not be calm. The belief that there is a safety net under the tightrope has allowed people to take risks they never would have otherwise. When they look down and see that the net is gone, the panic will be severe. The seriousness of this situation cannot be overstated. We have built an economic model that depends on a perpetual rescue. We are about to enter a period where that rescue may not be possible. 4. The forgotten virtue. Patience has been replaced by impatience. The single greatest advantage an investor can have is a long-term horizon. If you buy a piece of a great business and you are prepared to hold it for 10, 20, or 30 years, the day-to-day noise of the market is irrelevant. You can let the business do its work, compounding your capital year after year. Patience is not just a virtue in investing, it is the cornerstone of wealth creation. This virtue is disappearing from American life. We have become a society obsessed with the short term. Corporate CEOs are judged not on their 5-year plan, but on their next quarterly earnings report. Politicians are judged not on the long-term health of the nation, but on the latest poll numbers. And investors, as we've discussed, are judging their success not by the year, but by the minute. This chronic impatience is a destructive force. It forces corporate managers to make foolish decisions. They will cut back on vital research and development or skimp on customer service just to meet an arbitrary earnings target for the quarter. They will take on huge risks with massive acquisitions, hoping for a quick payoff rather than doing the slow, hard work of organic growth. They are sacrificing the long-term health of their business for the short-term approval of Wall Street. It paralyzes our government. We face enormous long-term challenges: our debt, our infrastructure, the education of our children. These are problems that require long-term thinking and sustained investment, but our political system is now so focused on the next election cycle that it is almost incapable of tackling any problem that cannot be solved, or at least appear to be solved, in 2 years. And it is a disaster for individual savers. It turns them from owners into traders, from investors into gamblers. It makes them chase fads and sell in panics. It robs them of the one great force that can build real wealth, the power of compound interest, which only works its magic over long stretches of time. The serious thing that is happening is that our entire system, from the boardroom to the halls of Congress to the individual brokerage account, is being rewired for short-term thinking. And a system that is optimized for the short term is, by its very nature, fragile. It has no resilience. It has no margin of safety. It is not built to withstand a storm. Conclusion: the ship and the captain. So what does this all mean? What is this serious thing that is about to happen? It is not a single event. It is the culmination of these 4 trends. It is the moment when a fragile system built on speculation and debt, with no margin of safety and no effective tools to fight a crisis, finally gets tested by reality. The test will come. I do not know the day or the hour, but I look at the storm clouds gathering, and I believe it is coming sooner than I once thought. This is not a message of despair. I am, and always will be, an incredible optimist about America. The productive capacity of this country is staggering. The ingenuity of its people is limitless. We have faced far worse challenges in our history, and we have always eventually righted the ship. But the ship will be tossed, and in a storm, the fate of the passengers depends on their captain. In your financial life, you are the captain. You cannot control the weather, but you can control the seaworthiness of your own vessel. This is a time for prudence. It is a time for simplicity. It is a time to remember the fundamental, boring, but timeless rules that build real, lasting wealth. Own productive assets. Don't own speculations. Keep a margin of safety. Don't use debt to finance your lifestyle. Think for the long term. Don't get caught up in the daily noise. And above all, be patient. The world is about to offer you the opportunity to buy the best businesses in America at bargain prices. You only get that chance when there is fear in the air. Prepare yourself now. Get your own financial house in order so that when that fear arrives, you will not be a victim. You will be a provider of liquidity. You will be the one with the calm head and the steady hand. You will be the one ready to act. Something serious is about to happen. But for the prepared, it will not be a crisis. It will be an opportunity. Thank you.